Tesla's down today, but I'm still holding my December $220 calls. And I'm not going to lie, I think I'm probably going to close them out tomorrow for a loss. And in this video, I'm going to explain why. Because for the past couple of months, you know that we've been very, very bullish on Tesla. We saw that even though we are under this market bias, which tends to show that we are in a bear trend, we are watching for weeks upon weeks all of this bullish accumulation that was occurring. This is why we thought the price was going to push initially up to 230 and 240. We got that massive rally. From there, we saw lower highs on the BX trender. You guys know that we were calling out the top on Tesla and thought the price was going to pull back to $200 before taking another bounce. That's exactly what happened. We came down into the market bias, price has bounced, and then we made last week a higher low on the BX trender. This is usually a confirmation that we're going to go for another rally, but instead price sold off this week. And you have to understand everything that we do within our strategy. In order for me to enter a position, there needs to be very, very specific criteria to happen. We teach all of that within our community. All of our courses are completely free if you want to learn all of that. But there's very, very stringent requirement in order for me to enter a position. I'm not entering a position because I feel like it. I'm not entering a position because I hope that the stock's going to go up. I'm entering a position because of a very important trigger. And now, if we were to close with lower lows and a no longer expanding, which is this dark gray market bias, that means that there's not enough money to push Tesla up in the next couple of months. Just being objective and honest here. With that being said, we need to wait for this candle to close tomorrow. There's a chance that we get good inflation data tomorrow morning and we see Tesla and the whole market push up potentially, for Tesla 2, 3, 4%. And then we close once again with higher highs on the BX and we're going to Sizzler, going to the moon. Everything's great. We're going back to 260. However, if that does not occur and we close just like this, or worst case down at $200, which I think could happen, then that's a very good sign that price is probably going to sell back off to 190. If we zoom out here on the daily chart, you're going to notice that we're back under the BX trender. We actually hit highs at 216 today. Things were looking good, but we sold off drastically. We also have lower lows again on the BX trender. Not a good sign. The fact that we're under the market bias, lower lows on the BX trender, not looking too hot. And on top of that, like we said, the weekly BX is showing lower lows. So tomorrow's session, we got to get back up to 216 or 220, or I'm going to be cutting my loss. Now, if I cut my loss, what do I think is going to happen from that point? Well, you'll notice that we have a big squeeze that's occurring. You can see that price is sitting underneath of this resistance level. And you'll also notice that price is holding this support level. So I'm really think that worst case, what's going to happen is price is going to sell back off to $200 and we're going to bounce. This is why I don't really want to sell my calls, because I feel that worst case, we're going to see the pullback into 196 or 192 before we get the bounce. But here's the deal. If I close them tomorrow and I take a loss, best case scenario, price will sell back off down into that 192 level. So for instance, we'll see price come back down into maybe 192 to $200. I can buy it down here and I get about a 10% discount, 7 to 8% discount, I should say. That's really solid. Or best case scenario, I should say, price just completely rebounds, pushes back up to 220 next week. I miss out. I take a loss that I shouldn't have, but I can just re-enter, right? Like I'm looking for this move into the next, rest of the year up to 260, 270, 280. So I'm not going to cry over missing out on 5 to 7% when from that point, there's still another 25 to 35% on the table. I would rather just re-enter once we have confirmation than hope that this level holds. Now, something that I could do that's a hybrid is I could still have a long position, even though the BX trender is not on our side. We're still over the market bias. We're still holding trend, but what I should do if I'm going to do that is I should close out the Decembers, still take a loss, and move it out instead until May or June of next year, because I still think that we'll push up to $300. It's more so the fact that it's not going to happen as fast. So worst case, we could say we'll set a stop loss at lower low, but we'll see what ends up happening here. No matter what, I'm closing those December calls for sure tomorrow if we close with a lower low on the BX. Just depends if I'm going to roll it out or wait until we get confirmation again. If you guys want to learn how I trade, get access to all of our indicators and all of the proprietary settings to these, the link to all of our courses are going to be in the description. The market bias course is going to teach you guys how to set up those indicators specifically. And if you want to learn my exact strategy from myself and trade with me each and every single day, get access to my real-time alerts, which were up over $1.4 million this year. It's freaking absolutely insane. Doesn't mean we're going to end this year up that much. We could end the year down. We could end the year like who knows, right? But if you want to trade with us each and every single day, get access to all of our real-time alerts, go join our private academy and our private Discord community. The link to that is in the description. I'll see you next time.